Hey everybody, welcome to Mortgage Today for Wednesday, November 15, 2023, and what a day it was. UMBS 6.5, we're down 41 basis points bright and early this morning, giving back about half of yesterday's gains in like an hour. Stocks were doing pretty well though. We got the core PPI and the headline PPI and retail sales in this morning. Core PPI month over month came in flat on a 0.3 estimate as 0.2 previously. Headline PPI came in month over month down 0.5 on a 0.1 forecast. It was 0.4 previously, but then we got retail sales, which came in at a negative 0.1 on a negative 0.3 forecast. Previous month was revised up to 0.9% from 0.7, and we're still up 2.5% year over year. So people keep buying stuff, which is going to impact inflation and make it worse. Personal consumption was down 0.6% month over month, but it rose 1.4% year over year. Speaking of retail sales, Target reported that third quarter comparable sales fell 4.9% compared to last year. Overall sales fell 4.2%. Home Depot reported U.S. comparable store sales down 3.5%, and overall sales fell 3% compared to a year ago. We get Walmart on Thursday, but consumer spending appears to be weakening, which is what we need in order to stifle inflation, but it's going to be tough for the stock market. Of these two reports from earlier today, retail sales is far more relevant in terms of bond market movement potential. We also got news that House lawmakers on a vote of 336 to 95 passed a two-part stopgap spending bill yesterday that would extend the government funding into 2024. Passage comes ahead of Friday's deadline when current funding for federal agencies is due to expire. The measure now heads to the Senate before going to Biden's desk for signature. The latest MBA quarterly mortgage bankers performance report also doesn't make for easy reading. This report revealed that during the third quarter, independent mortgage bankers saw a pre-tax net loss of $1,000 per loan. So doing more business loses you more money, which is almost twice the $534 loss seen in the second quarter and worse than the $624 loss seen in the same quarter of 2022. So that's a long time of losing money on every single deal that you do. That's tough. After Tuesday's big CPI reaction, Wednesday brought the week's only other top-tier economic report. Retail sales may have been negative, but by coming in at 0.2% higher than expected, the report paved the way for weakness in the bond market. Actually, it's probably more accurate to say that yesterday's big rally paved the way for weakness in the bond market, and today's retail sales data confirmed that sellers need not fear a big immediate extension of the rally. Consider that 10-year yields rallied almost 50 basis points in just 2 weeks. It makes sense to have a moment of cool-off. Unfortunately, due to holiday timing, we may be in for a weird 2 weeks of cooling off with random volatility inside our moderate range that is ultimately broken by the first full week of data in December. UMBS closed the day down 20 basis points net at 100.91, which is actually 23 basis points better than the worst part of the day. But at 100.91, that is putting us right in this thicket of things. So we have a Fibonacci line pretty much right on top of us, as well as the 100-day moving average. Next ceiling is about a half point up with several floors right below us that will hopefully provide a little bit of normalcy. We could use some normalcy. Another mortgage business news, Better.com, or Better Homes and Finance Holding, reported a $340 million loss in quarter three, plans to keep trimming expenses, expects to originate $500 million in mortgages and lose $340 million. Many of you remember Better.com as the people that did the multiple rounds of highly insensitive layoffs earlier this year and last year. So it looks like karma's coming around.